Hey, it's Scott Garlis at Stansberry Research. I'm here at the 2019 Alliance Conference here in Las Vegas. I am with famed Wall Street investor and publisher of Empire Financial Research, Whitney Tilson. Whitney, thanks for being here.
It's my pleasure.
Great presentation.
Thank you.
Certainly. So a couple of questions for you. In your presentation, you touched on a few successful speculative investments. When you make huge gains like you discussed, when do you think about exiting?
Yeah, it's a high-class problem, and you'd think, why is that so important? Because if you've got a stock that's really ripping and doubling, quadrupling, et cetera, but it turns out the key to long-term investment success is knowing how to ride those winners, because you only need a few of those every 10 years, and that can make up for an awful lot of mistakes, right? So letting your winners run is one of the critical skills. And so it's hard to do, though, because if you thought it was cheap at, say, $10 and now it's at 20, maybe it's not cheap, right? So it's time to sell. So, generally speaking, what I ask myself is is the story still intact? And I actually I don't completely suspend my valuation principles, but I'm willing to sort of be more flexible. If I've got a company that everything is working out beautifully, the stock has doubled to what was my estimate. Let's say I thought it was worth 20, I bought it at 10. And now, in a very short period of time, it's doubled to 20. Well, it's easy to anchor on that $20 initial price target you set and say it's time to sell. But the thing is if the stock's quickly doubled to 20, there have probably been some really positive developments. Like in the case of Netflix back in 2012, when I nailed it at the bottom, the company was raising prices. It was expanding internationally. Good things were happening. So I stayed in that stock because when it got to 20, my intrinsic value, I had to refresh it in light of all these good developments, and now intrinsic value is 30. And by the time it got to 30, intrinsic value is 40, and that's the dream. That's what you look for, is stocks where intrinsic value keeps moving up, and so you don't have to sell the stock. So then you have a separate problem if the stock goes up manyfold, is it gets to be a very large position in your portfolio. And there's no right answer there. It's really what can you sleep with at night. And it also depends. Is it something like Berkshire Hathaway that's a less volatile stock that's very stable versus something like Netflix, which you probably need to do a little bit more trimming because it's a little riskier, right? So, but generally speaking, one of the biggest mistakes in my investing career is I owned Amazon 20 years ago. I owned Apple. I owned Netflix. I made good money on all of those, but I did not really let them run the way I should have.
Now, would you ever recommend people, maybe when they get to the point where, say, it's a double or triple, maybe taking money off the table and playing with house money, so to speak? Well,
a couple of things I'd say is there is no such thing as house money, right? Anytime you can sell, you always have the option to sell completely. So sometimes it's helpful psychologically to think of it as house money, but a dollar's a dollar, whether it's a stock that's gone down by 50% or a stock that's tripled, right? So don't fall into the house money trap. You just need to constantly be evaluating the business relative to the stock price. But in the case where you've really gotten an opportunity to get into a high quality business that's really firing on all cylinders, one of the mistakes I made is I was very strict on my valuation, and when a stock sort of came up to intrinsic value, I tended to sell a lot of it, and that was a mistake. I'd almost suggest if it doesn't happen very often, but if you just get a stock that's a company, forget the stock, a company that's really crushing it, become more of a growth investor and less of a value investor. That's coming from a hardcore value investor, because I don't even want to think of how much money I left on the table by applying very strict valuation principles. And I've got friends in the business. I have a friend who bought Berkshire Hathaway A shares at $200 a share in the 1970s, and he's never sold them, right? He found a brilliant investor in Warren Buffett, a great company in Berkshire Hathaway, and not one day in 30 or 40 years did he wake up and get dumb and say, you know what, it's time to bank my profits and all, right? So, Tom Russo has owned Brown-Forman, the maker of Jim Beam whiskey and all, for 37 years. He's never sold a share.
Wow.
So if you find in a great situation like that and you get the opportunity to get in at a reasonable price and then it just starts to work, let it run.
Wow. Great words. Now, how risky is the upcoming election to your investment ideas about Fannie Mae?
Yeah, I'd say there's a fairly high degree of risk. If particularly Elizabeth Warren, who's currently leading in the, at least on the betting sites on the Democratic side, she has indicated she would just want to nationalize them, and that could wipe out shareholders. I don't think she would be able to, but the rhetoric is certainly bad, and it would hit the stock. So the key is the Trump administration, with Secretary of the Treasury Mnuchin and Mark Calabria, who runs the Federal Housing Finance Agency, the two of them recognize that there could be a Democratic president, and so they are moving super rapidly to recap and release Fannie Mae and Freddie Mac and make it such that it'll be too far down the road for it to be reversed if a Democratic president comes in. So that's actually good for the stock in the short term. But yes, yeah, there's risk. And so you might want to think about hedging your portfolio. I can't say what the stock is, but in the next couple weeks when we release our next monthly newsletter, we're recommending a stock that will do very well if a Democrat is elected president, right? And we're deliberately doing that as a bit of a hedge against our Fannie Mae position.
Makes complete sense. Altria.
Yes.
Same thing.
It's There are a number of risks around the largest cigarette maker in the United States. You know, one is, as Altria owns a big stake in Juul, and there's been a lot of regulatory pushback with some people dying from not Juul, using Juul products. So that's certainly one area of risk, and the decline in the number of people who smoke every year is going down. So that's a long-term risk, sort of a melting ice cube, but it's awfully cheap at 9 times earnings and yielding 8.4%. And then you have regulatory risk under a Democratic administration. I mean, look, no one's going to outlaw cigarette smoking, and there are already severe restrictions. They basically can do almost no advertising, et cetera. So it's not clear to me. I wouldn't put it in the top 2 risks, but maybe in the top 5 risks, a Democratic administration under Altria.
And then at the end of your speech, you discussed cryptocurrencies and pot stocks.
Right.
And both of these you warned people about a year ago.
Yes.
So what are your thoughts now?
Yeah, very divergent. A year ago, both were pure speculative bubbles. At that point, pot stocks were near their all-time high. Crypto had come down from 20,000 to 6,600, and I still warned people about Bitcoin and other cryptos. There's been a very different outcome for those two, and therefore I have very different recommendations today. So in the case of cryptos, I looked very smart for the first couple of months as cryptos got cut in half again and was down there at about $3,300 per Bitcoin. And then it spiked up to 14,000, and today it's at 8,000 or so. So actually, year over year, Bitcoin is actually up moderately since I warned people about it, though it's been a very wild ride, and I did save people from a 50% drawdown initially. My view on cryptocurrencies, not blockchain, because blockchain is very real technology that I think will find many valuable uses, and I want to differentiate between blockchain and Bitcoin and the cryptocurrencies, which I don't think will ever be accepted as a mainstream currency, like the dollar or something like that, right? So I've said that I think cryptocurrencies are a techno-libertarian pump and dump scheme, and I've just warned individual investors to just don't go there. It's not a good area to speculate. If you want to speculate, I think Fannie Mae is an interesting speculation. It could go to zero. That's almost the definition of a speculation, something that could go to zero, but you could make many times your money, right? But you want those odds skewed heavily in your favor. I think Fannie Mae has 8 to 10 bagger potential on the upside and could be zero, but it's skewed toward a positive outcome, right? I think cryptocurrencies, I have no idea how to value. They don't generate any cash flow and all. They're a purely speculative instrument. So let me shift to pot stocks, which have gotten decimated, well over 50% declines across the entire cannabis sector since a year ago. But I actually now think there's opportunity in that sector because unlike cryptos, marijuana is a sector that has real revenues, has a very favorable legislative tailwind with legalization coming across America, state by state, but also across the world. And I think it's going to be a major growth area. And now that the stocks have gotten decimated, I think I think it's a very interesting area in which to do research. And I'm starting to do the research myself. But in the meantime, I recommended to the audience today that they look at Tom Carroll and his new newsletter, Cannibalist Capitalist. Tom's a real expert in the sector. I've been consistently impressed with his analysis of the companies that he recommends. So that's an area where I think, still very speculative, but where I think there are real fundamentals underlying the sector that are very favorable, and the stocks have now fallen so much that I'm very open to the idea that there could be some good opportunities there.
Thank you very much for your time.
All right.
Hey guys, thanks for tuning in. Stay tuned all week for updates.